Good afternoon, everyone. Thank you for joining us this afternoon during your lunchtime. We have a very special webinar series that we want to host for you with a very special guest, Mr. Louis Wong from our Hong Kong Phillip Securities. And we're very excited to share with you Mr. Wong's potential value stocks. So please also kindly note this is the first part of a four-part series, and you really want to stay for all four parts as well. So stay tuned for the end. At the end of the webinar, I will also be going through one of the promotions that we have currently ongoing, and I believe a lot of people will be very interested to know more as well. So without further delay, I would like to hand over the time to Mr. Louis Wong to begin on his Hong Kong potential value stocks presentation. Mr. Wong, please. Thank you.
Thank you. Good afternoon, everyone. We have scheduled four series part on presenting to you 10 Hong Kong potential value stocks, which we have shortlisted. The scheduled dates will be this Tuesday. This is the first series from 1 to 1:30. And then next week, next Tuesday, will be our second series. Also from 1 to 1:30. And the first series will be held on the 6th of June. That is Thursday afternoon, also from 1 to 1:30. And then the fourth series will be held on the 13th of June from 1 p.m. to 1:30. So do mark them down on your diary and do join us, join all the four series part to have to understand or to share with us these 10 Hong Kong potential value stocks. So for this series and the next webinar, we'll present to you two companies, Hong Kong companies each. And then in the third and fourth series part, we'll present to you three companies each. So altogether, we have picked shortlisted 10 companies for our presentation. Okay, the first one company that we have chosen is one that you may be familiar with. When you come to Hong Kong, you may have visited their or even patronized their shops. Chow Tai Fook. The company is principally engaged in the manufacture and sale of mass luxury and high-end luxury jewelry, as well as the provision of jewelry-related services. The company's main products include gem set products, gold products, and platinum carat gold products. It operates its business through four segments: jewelry business in mainland China, watch business in mainland China, and business in Hong Kong, Macau, and other markets, and business of Hearts on Fire. This is one sub-brand under the company called Hearts on Fire, selling diamond jewelry. Okay. Financial performance. The company's financial year end is March. So we have the first 6 months financial results up to end of September last year, 2023. Revenue in the first half of 2024 financial year was up 6.3 year on year to 49.5 billion Hong Kong dollars. That's 49.5 billion Hong Kong dollars. Operating profit and net profit grew more substantially. Operating profit increased by 34.9% to 6.29 billion Hong Kong dollars. And the operating profit margin was up 55.2% to 12.68 percentage points. This is the operating profit margin. Net profit increased by also more than 30%, 36.4% to 4.55 billion, and net profit margin stood at 9.3%, up 60.9% year on year. Earning per share was up 36.23% to 46 Hong Kong cents per share. ROE very decent one, 15.53% ROE, and ROA was 5.28%, and the interim dividend payout ratio was 54.9%, a rather generous payout ratio. Okay, um, this chart shows the breakdown of different uh, markets for the company. So on the left, you can see mainland retail. The yellow part, the yellow bar represent its retail as well as wholesale business in mainland China. So Chow Tai Fook, although it's a Hong Kong company, actually more than 80% of its revenue, this is revenue by reportable segment, 80% of its, more than 80% of its revenue comes from mainland China, as shown in the left chart. 35.8% comes from retail, 46.3% comes from wholesale. So making up more than 80%. So strictly speaking, it's not a Hong Kong company because it derives most of its revenue as well as profits from mainland China. Okay, and Hong Kong and Macau of China and other markets account for around 18%. You can see 18% here of its revenue in the first half of financial year 2024. One distinctive thing about the different markets was the recovery in the Hong Kong and Macau market was more profound last year because of more tourist arrival to Hong Kong and Macau. So you can see revenue for the Hong Kong and Macau and other markets increased by jump 57.7% year on year, whereas China is still still seeing a rather relatively slow recovery. The retail part actually saw a slight decline of 3.7% in terms of revenue in the first half 2024 financial year, but the wholesale business still managed to eke out a 2% increase in revenue. Okay, so this on the right-hand side is a breakdown of revenue by product. It's three main products: gem set, platinum and K-gold jewelry, gold jewelry and products, and watches. Watches account for less than 10%, around 5 to 6% in the last 3-4 years. I mean, for the first half, you can see highest was the first half of 2021 financial year, amounting to 9%. But for the rest of the years, the percentage was around 5 to 6%. 80% comes from gold jewelry and products. So it's a key. So we can sum up for Chow Tai Fook. Mainland China is its key market, accounting for more than 80% of its revenue. And in terms of product mix, gold jewelry and products account for also 80% of its revenue. The other 14.7%, around 15%, comes from gem set, platinum, and K-gold jewelry. Usually when the economy is good, the demand for gem set, platinum, and K-gold jewelry it will be stronger. But in sluggish economy like last year, demand for gold jewelry will outperform that of gem set, platinum, and K-gold jewelry. Okay, this is about gold. Investing in gold as a non-interest bearing asset. The opportunity cost of holding gold will decrease during the interest rate cut cycle. In addition, the fall of the US dollar will also benefit gold prices. Revenue of gold jewelry and products increased 12.8% in the first half of 2024. Its contribution to the group's revenue increased by 450 basis points to 80.1%. You can see in the first half of 2022 financial year, gold jewelry and products account for 75.6% of its total revenue. But in the first half of 2024 financial year, its share increased by 450 basis points to 80.1%. Okay. And we noticed resilient average sales price, ASP. The ASP stable trend sustained across different categories. So the red line represent Hong Kong and Macau market, and the yellow line represent mainland China. You can see the breakdown. In mainland China, this is same-store sales growth, and this is same-store sales volume growth. China in the first half of financial year 2024, first half 2024, was still undergoing a slow recovery. That's why you can see same-store sales growth in all different products still recorded negative growth, and same-store sales volume growth also dropped between 7.3% to 27.6%, and the average sales price was between 8,100 for gem set, platinum, and K-gold jewelry. As I mentioned earlier, usually in good times, people are wealthier. They will the demand for gem set, platinum, and K-gold jewelry will be stronger because the average sales price is much higher. Yet in the sluggish economy, consumers' demand for gold jewelry and products, of which the average sales price was relatively lower, will be stronger. Okay, Hong Kong in the first half of 2024 financial year saw a very strong recovery. Overall, same-store sales growth was close to 60%, and also the demand, the same-store sales growth for gold jewelry and products increased almost by 100%. Okay, and the average sales price is almost double that in mainland China. You can see gem set, platinum, and K-gold jewelry average sales price in Hong Kong and Macau was 16,800 compared to 8,100 in China. And for gold jewelry and products in Hong Kong and Macau, the average sales price was 8,500 compared to 5,600 Hong Kong dollars in mainland China. Okay, this is a summary of the chart I showed you just now. Same-store sales in the mainland dropped 3.5% in the first half of financial year 2024, largely due to the high base of comparison in the 1 year ago. And in Hong Kong and Macau, the recovery of inbound mainland tourists continued to be supportive to the business, with same-store sales growth of 59.6% in the first half of financial year 2024. Same-store sales in Hong Kong increased 52.5% during the period, while that in Macau jumped even bigger, saw a bigger jump, 87.3%. Okay, this is revenue. Retail sales value. RSV stands for retail sales value by product and by channel. So this one is by product. You can see the three types of products the company sells. For gold jewelry and products in the first half of 2024, retail sales value increased by 15.1% year on year. And then watches retail sales value also increased by 11.6%, except gem set, which are more high price. As I showed earlier, it dropped by 5.8% year on year, the retail sales value. By channel, the company has three main sales channel. One is under the main brand, Chow Tai Fook Jewelry, Zhou Da Fu Zhu Bao, and other store brands and e-commerce. So all three channels recorded positive growth in terms of revenue sales value in the first half of financial year 2024. Chow Tai Fook Jewelry, the products sold under Chow Tai Fook Jewelry increased by 11%. Other store brands increased by 18.1%, and e-commerce increased by a smaller scale, 1.9%. Okay, this is the retail sales value by different point of sales in mainland China. POS stands for point of sales. So this part shows you the breakdown of different cities, from tier 1 to tier 4 cities and others. Okay, all different tier cities, the retail sales value recorded positive growth in the first half of 2022 financial year 2024. And no surprise is the growth in tier 1 cities is the highest, 19.6% growth year on year, with the net increase of point of sales of 34 point of sales are added in the first half of the financial year 2024. Tier 2 cities increased, the retail sales value increased by 11.1%, with net increase in total number of POS by 103. Tier 3 cities increased by 5.8, and Tier 4 cities and below increased by 9.5%. The net POS, net point of sales, also saw increase of 20 and 32 respectively in the Tier 3 cities and Tier 4 cities. Okay, this one shows operating model. There are two operating models under Chow Tai Fook. One, the shops are self-operated by the company, and the other one is franchise. So you can see franchise account for 69% of the total retail total sales value, total retail sales value. A lot of the company, they are franchise. Okay, self-operated stores accounted for 31% of the retail sales value. In the first half of financial year 2024, the self-operated stores recorded a slight drop of slight decline of 0.6% in retail sales value year on year, because net POS increased only by 15 POS point of sales, whereas franchise under the franchise model, there was a net increase of 174 point of sales, and contributing to 17.1% increase in retail sales value year on year. Okay, this is the breakdown of store format. So there are three types of store formats. The shops can be open in shopping mall or department store, or others, maybe street level, main street stores. Okay, so those operated in shopping mall, you can see, accounted for 47% of the retail sales value in the first half of financial year 2024. 31.6% of the RSV comes from the shops open in department store, and the rest are from other store formats. Okay, so it's quite evenly distributed in terms of store format. But in terms of operating model, it's 70-30. 70% comes from franchise operators, and 30% comes from its self-operated shops. Okay. As for Hong Kong, the Hong Kong account for RSV is 64.9%. So Hong Kong is still accounting for close to 70% of the RSV among Hong Kong, Macau, and other markets. Macau accounted for 21.4% of the RSV, and other markets accounted for 13.7%. Okay, that's the makeup of the RSV. So in the first half of 2024, RSV from Hong Kong increased by 37.6%, with only one net increase in POS. So in Hong Kong and other markets, unlike in China, there's Chow Tai Fook is still opening, expanding in terms of POS very rapidly, with more than close to 200 net increase in POS. But in Hong Kong and China, the market is quite mature and saturated. So net POS increase is quite slow. Hong Kong in the first half of financial year 2024, they only increased at one POS. And other markets, 5 POS point of sales were added. But the RSV growth was quite very remarkable in the first half of financial year 2024. Okay, we are still upbeat about gold price this year or even beyond 2024 because we saw strong demand from central banks pushing up gold prices. You can see natural central bank purchases was on the increase since 2009, 2010. Okay, and gold price move in line with more gold purchases from different central banks. Among the central banks, you can see China ranked number 1 in terms of annual changes in central bank gold reserves. So looking back at the past 4 years, China, India, and Turkey are the 3 countries that are increasing, adding to its gold reserves very rapidly. Okay, and Swiss gold exports to mainland China and Hong Kong also shows there's the Chinese gold import surge in January this year to 150,000 kilograms of gold imports by China. Okay, U.S. interest rate is expected to be higher for longer, but what explains for the reason why Chinese huge demand for gold reserves? It is believed that Chinese leaders are worried that the country could face U.S. curbs and sanctions if it decided to further flex its military muscles, or if the trade war worsens. So China is preparing itself to hold less US dollar and to gradually reduce its US dollar holdings and diversify its reserve with more gold purchase. Okay, this is the price chart of Chow Tai Fook. It actually still underperformed the Hang Seng Index. Compared to end of last year, it was still down by about 5 to 10, between 5 to 10%. So it's still undervalued at the current stock price. Okay, this is the 5-year historical average PE of the company. The fair value would be this red dotted line. Fair value would be around 17 Hong Kong dollars. Now it's trading at below 11 Hong Kong dollars. So it's below -1 standard deviation. -1 standard deviation is 13.728. Now it's trading below -1 standard deviation. It only happens twice. Such low valuation only happened twice in 2019 and 2020. So at the current price and valuation, we reckon that the stock is undervalued. Okay. The other company we had chosen with potential value in Hong Kong is Wong. Wong. The company was established in China in 1992 and was listed on the Singapore Stock Exchange in 1996, but it was subsequently delisted in September 2007. It was then relisted, this time on the Hong Kong Stock Exchange in 2008. So Singapore investors may also be familiar with Wong, which had once been listed in Singapore. Wong is engaged in the manufacturing, distribution, and sale of rice crackers. Wang Xian Bei, very popular snack of the sold by the company, and also they offer dairy products and beverages. Wang Zai 牛奶, Wong milk, snack foods, and other products. While most of its operations are primarily located in China, it also exports to the US, Canada, Southeast Asia, and Europe. Okay. In the first half, ending end of September 2023, its revenue increased 3.91% year-on-year to 12.5 billion Hong Kong dollar. Operating profit saw double-digit growth, grew by 18.34% to 2.556 billion Hong Kong dollars, and operating profit margin increased by 3.6% to 20.44%. Net profit increased by 8.53% to 1.888 billion Hong Kong dollars, and net profit margin was 15.05%. Earning per share was 0.16 Hong Kong dollars, 16 Hong Kong cents. ROE also saw double-digit ROE, close to 12% ROE, return on equity. Return on asset was 6.5%. Okay. Revenue structure. Here we break down into different products, namely dairy products and beverages, snack foods, rice crackers, and other products. You can see dairy products account for 54%, half of its revenue. And then snack foods account for 27%, and rice crackers account for 18%, and other products only account for 1%. So over the last few years, this breakdown remained stable, with dairy products and beverages accounting for around 50 or slightly more than 50%, and snack foods accounting for less than 30%, and rice crackers accounting for around 20%. And the gross profit margin, because of competition, admittedly competition in China, the gross profit margin and also the increase in raw material costs. So in 2021 and 2022, the gross profit margin has saw a decline from 48% to around 44%. But since 2022, it saw a rebound in the gross profit margin to between 45% to 46%. This is the gross profit margin. Okay. Now, raw material price changes affect the gross profit margin, as I mentioned earlier. Rice crackers, the gross profit margin for the interim 2024 financial year was 43.8%, up 6.6% year on year. This was mainly attributable to the decrease in palm oil caused by approximately 30% in the first 6 months of 2024 financial year. The gross profit margin for dairy products and beverages was slightly higher than that of the rice crackers, amounting to 47.3%, up 2% year on year. This was mainly due to the decrease in the unit cost of packaging materials such as tin plate and raw paper by a high single digit to mid-teen percentage. So for rice crackers, it benefits from the drop in palm oil price. For dairy products and beverages, it benefits from the decrease in packaging material costs. Okay, the gross profit margin for snack food was 43%. Okay, this was mainly the rise in gross profit margin was mainly due to the increase in the unit cost of sugar and gelatin by a high teen percentage and 13% respectively. Gelatin saw a rather sharp rise in the first half of financial year 2024. However, it was partially offset by the benefit of other cost reduction. So the company did well in cost reduction and partially offset the rise in sugar cost and gelatin cost. Okay, so this is the crude palm oil prices movement. I think you must be quite familiar with palm oil price movement. Drier El Nino years weigh on palm oil use, so it's affected by weather. So I will skip this part. Okay, 2024 projection, a new update from the World Meteorological Organization (WMO) says there is about a 60% chance of El Nino persisting during March to May, and an 80% chance of neutral conditions, neither El Nino or La Nina, in April to June. And there is a chance of La Nina developing later in the year, but the odds are currently uncertain. Okay, so this will impact the palm oil price. Although we notice there's intensive competition in the market, One is operating in, yet it benefits, it consistently enhances competitiveness by continuous innovation. Okay, and the snack market in China has a huge potential of a huge growth potential. The market size of snack food industry in China is expected to reach 1.15 trillion yuan in 2026. Okay. However, on the other hand, fierce competition due to lack of diversity and innovation. Data shows that the CR4 of domestic snacks is only 9.7%, while the figures in the United States and Japan are as high as 38% and 23.8% respectively. So it's still very fragmented. The market is still rather fragmented compared to US and Japan. Differentiated brand positioning and new products. This is the strategy adopted by Wong. The company launched differentiated sub-brands targeting different consumer groups for mothers, babies, toddlers, the elderly, women, and fitness enthusiasts. And leveraging on its R&D capability, the company has continued to introduce innovative products and enrich new flavors. Example, 动吃 double layer QQ gummies, 双层 QQ 糖. These are innovative products launched by the company. Okay. While the company is expanding overseas sales channel, its operational performance saw some stagflation in operational performance. All product lines still contribute the most to the company's revenue. So the company needs a transitional period or needs to transform, need to replace old product lines with new and innovative product lines. And at the moment, it may be one risk, potential risk is hard to find next growth point. Yet overseas business achieve a high teen revenue growth rate in the first half of it should be 2024 financial year. For instance, the Vietnam plant has begun to undertake overseas orders. So yes, huge growth potential in ASEAN. 5 overseas subsidiaries in Vietnam, Thailand, Indonesia, Germany, and North America have been put into operation and continue to explore the localized business model. Okay. You can see the share price, similar to Chow Tai Fook. It also underperformed the Hang Seng Index. It was still down also by around 5% compared to last year, end of last year. Okay. And it's also trading at below -1 standard deviation. The fair value would rate the company as 14.6 Hong Kong dollars. Currently is around below $12. So it's slightly below -1 standard deviation. So the target price would be in the long run, we view that these two undervalued companies will be able to see their valuation recovering to the fair value. Because current peer group average PE is 17 times, and now at 14.625 is still below the current peer group average PE. Okay, so that's our presentation on the two value stocks we picked for the first series, namely Chow Tai Fook and Wong. Okay. What are the hidden gems that are worthwhile to invest with the Chinese government rescue package of 4.42 billion and the support to sell excess inventory? Okay, I think you are referring to the property sector. So we've preferred, and also we reckon that the state-owned property developer with state-owned SOE, which are SOE, are still worth investing. There are 3 companies in mind. One is China Overseas Land. The stock ticker is 688, 中国海外. The other is CR Land, China Resource Land, 1109. And the third one is Guangdong Investment, 越秀地产. The stock ticker is 123, 123, 1109, and 688 if the property developers are concerned. Can you explain what happened to 1760 stock price? Last year on 8th, released a research report in Intrantech when it was $3.5 per share. Recommend us to buy with a target price of 4.15. It has been on the downhill since, and now it's around 1.98. Please explain. This one we need to I need to check. Maybe next time we'll in my next presentation next Tuesday, also the same time between 1 and 1:30. Martha, can you take note this down? 1760. will find out what happened to the company, what any substantial change in the fundamental of the company. Okay. Do you have visibility of inflow of foreign institutional fund into Hong Kong market over the last 2 weeks till today? Yes, but I cannot offhand show the data. You can refer to IIF, the data which records foreign fund flow into the Hong Kong market. Also, this one I will provide you with the information next Tuesday. Okay. On Chow Tai Fook, do you know why there is a big gap on the ASP between mainland China versus Hong Kong, Macau? It's because of the spending power. Hong Kong, even compared to China, now a lot of Hong Kongers go to Sunshine, the Greater Bay during the weekend. It's because food and other, including jewelry, are much cheaper in China. ASP the gold price, you may question gold price remain the same everywhere in China, in Hong Kong, or in the US, but the unit price, I mean the affordability is quite different between China and Hong Kong and Macau. So China, they can afford ASP for gold jewelry is just now we show for gem and carat gold products is 8,000 Hong Kong dollars, whereas in Hong Kong is more than 16,000 Hong Kong dollars. Because the spending power in Hong Kong is higher than that in China. What is CR4? The top four players in the market. So this is a constant representation of the concentration. In Japan and US, the top four players account for 20 to 30% of the whole market, whereas in China, this one refers to Wong. The data we show about Wong, the top four only account for less than 10%, around 9% of the total market. So it's still a very fragmented market. Okay, Chow Tai Fook and Wong. Just now we mentioned the fair value. The target price, long-term target price would be the fair value shown on our last chart. I'll show you later. Now it's 10:80. Can we go back a little bit? Need to calculate. This is not the share price. It's the PE, around 17 times PE. So next, I think its year end is March. So the company both companies, Wong and Chow Tai Fook, will announce their full year results in very soon, before end of June. So we can take the actual EPS, earning per share for the whole year, and then and we assume that it will trade at the fair value of around 17 times. So you multiply the earning per share by 17 times PE would be our medium-term target price for Chow Tai Fook. Likewise, for Wong, the fair value was 14.625 times. So it will release its full when it releases its full year results. You take the earning per share and multiplied by 14.6 times PE, and you get the target price for 1 won. Okay. I want to join Telegram groups, but do not know how. It should be our P3. If you have a dealer or Remise in Singapore, you may, with PSPL, Phillip Singapore, Phillip Security Singapore, you can check with them how to download our app, our Phillip Securities app. And then when you, after downloading the app, you can search my community group. It's Master Wong, Huang Sifu community group. And then you join the group, and then you'll see my commentary posted there. And I also will reply to inquiries, questions raised by the members of the community group. Okay, any comments on Chinese mining stocks like Jiangxi, Copper, Chalco? Now the sentiment are very bullish towards these two companies on the assumption that the Chinese economy the recovery will accelerate in future, as demonstrated in the recent rally in both stock. But technically, from a technical analysis point of view, both stocks are currently overbought. So we are expecting some short-term correction on the share price for Jiangxi Copper and Chalco. But the medium-term outlook is still, we are still upbeat. We believe there's still some upside. Why is Dongyue Group, Dongyue, jumped so much for the last months after sleeping for the past year? They have some new products. Let me see here. 189 that contribute to their results. It's the silicon, because they are now, in the past, Dongyue is mainly engaged in the manufacturing and sale of refrigerant. Now they are entering the silicon industry. So in the first quarter this year, the silicon business turn around, generating a profit of 45 million yuan. And recently, Haitong International, a local brokerage firm, expect its net profit to increase from 1.6 billion this year to 2.1 billion next year, and 2.5 billion in the year after next. So they are expecting rapid earnings growth in the next 3 years. In 2023, the company reported net earnings of only 600 million, and profit attributable to shareholders of the company was around 700 million. So you can imagine the estimated profit for this year would be more than double to 1.6 billion, according to Haitong International's projection. And in 2025, it will further increase to 2.1 billion, and 2026 to 2.5 billion. And that explains why its share price surged recently on the support of strong growth in expected strong growth in earnings. Okay. is it logical for A shares to be trading at a large premium to X shares? What the reason? Because it's a structural reason. Because A share market and the investors cannot arbitrage between A share market and the X share market and the Hong Kong market. That means even the same company with shares listed on either in Shanghai or Shenzhen as A share and also listed in Hong Kong as X shares. Investors cannot buy the X share at a lower price and then transfer the stock to Shanghai or Shenzhen and then sell on the Asia market. No, that's not allowed. There's no transfer of shares from Hong Kong to China. Investors now can buy Hong Kong X shares directly through the Stock Connect. Yet when they sell, they have to sell in Hong Kong as X shares. So because there's no arbitrage, that explains why the premium. It existed for many years already, and the reason is different investors. Investors in China, they had a higher valuation for the same company, whereas in Hong Kong investors value the companies at a lower valuation level. So that explains the premium, A-share premium. Okay. Did you mention Guangdong investment? No, no, sorry. I mentioned Guangdong property. 123. The stock Guangdong Investment is a different company from sorry, it should be Guangzhou Investment. 123, not Guangdong. Guangzhou. Last question. China capital outflow surges to higher since 2016. Should investors be concerned? Yeah, but on the other hand, we also noticed that since 2020, in global equities funds have been underweighted China. Now they are reducing their underweight. They're reducing their underweight. So on the other hand, capital outflow may be because of rich people migrating to Singapore, to the US, to the UK, and they are bringing their money out of China. Yet not exactly from the equities market. But on the other hand, we also see foreign capital starting to come back. We saw a comeback of foreign capital inflow into the equities market of China, both China and Hong Kong, because of the very low valuation. So I will reply the two questions raised just now. One on 1760, and the other one is let me see. I've noted down the questions. So I finished the Q&A now, and let's get back to the anchor.
Hi, thank you very much, Mr. Wong, for the presentation and for the Q&A session. So in the interest of time, I would like to just quickly run through a lucky draw promotion that Poems is having on Hong Kong stocks. So just give me a moment while I share my screen, everyone. Okay, as you can see, we are having a lucky draw promotion when you invest in Hong Kong stocks with Poems. Some of the prizes include a round trip to Hong Kong for two, a one-night stay at Shangri-La Sentosa, and in line with what Mr. Wong has mentioned earlier, we also have prepared a mystery gift from Chow Tai Fook for the third place winner. Some of the other prizes include a Xiaomi voucher, a Samsonite voucher, as well as a Hai Di Lao voucher. If you're interested to see the website, I've posted it inside the chat. Later on, you can click through and read more on the terms and conditions. But what is this lucky draw all about? Basically, as long as you buy Hong Kong stocks through Poems, you are automatically eligible to take part in this lucky draw. We will record your account number, and you will be eligible to take part in this promotion. So, in the interest of our new and our existing investors, in order to even the playing field a little bit, we have also split this draw categories into two. So basically, if you're a returning investor, you're coming back to the Hong Kong market after a break. Maybe you traded last year, but for the start of this year until now you haven't traded, you'll be classified into a new investor category. Whereas for our clients who have been trading in the Hong Kong market consistently, you have been sorted into a second category, which means basically there are two first prizes to be won, two second prizes to be won, and so on. So again, I would just like to mention it's a pair of air tickets to Hong Kong worth about $800, a one night stay in Shangri-La Hotel Sentosa worth about $500, and our mystery gift from Chow Tai Fook, which is worth about $388. Okay, so how can you take part in this? Okay, so every buy contract actually is basically an entry into this lucky draw. So example, you bought one lot of Meituan, and then later on you bought one lot of JD. Okay, so these constitutes to two buy contracts. You get two chances in our lucky draw. And but if let's say, however, you buy one lot of Meituan, and then later on the same day you buy another lot of Meituan, this is actually stacked on top of each other and is actually counted as one entry only. So it would be good to diversify a little bit, as well as I would just like to point out as well, all Hong Kong stocks, ETFs, and cover warrants that can be traded online via Poems or offline by your trading representative will be considered a valid Hong Kong stock for you to take part in this lucky draw. Sorry, one moment. Yes. Okay. So all Hong Kong stocks that are available online, ETFs are included as well as cover warrants are included as well, will be considered as a valid trade. So we have a lot of information available. One of it is Mr. Louis Wong's series with us. So be sure to join up for next Tuesday and the following 2 weeks. Worth of we only covered 2 out of 10. So do join us next week. We also have several other platforms. So, for example, earlier on, I believe we have Mr. Teo. You were talking about how you want to get in touch with Mr. Wong's community. Well, on our webpage, we actually have a link for you here. You can actually press this link to join. To open a, it's not really opening an account, but rather create a free account in our Poems mobile tree. Of course, if you're already a Poems client, you can just log in with your account, and then you can join Wang Shifu's community over there. Okay, it's very consistent post. I highly recommend. And of course, we also have other um, sorry, excuse me. We also have other assets that you can use, like Phillip Hong Kong has the investor notes as well. You can subscribe from the webpage. We also just concluded our strategy and stock picks videos, which you can also go and visit the replay. In addition to talking about replays, this replay will also be up on our YouTube channel, and it will be available. Today is Tuesday, so it should be available from Thursday or Friday onwards. You can always go back and check, listen to Mr. Wong's presentation one more time, and fully digest everything. Okay, and with that, we've come to the end of today's webinar.